There are only 5 ways to scale how many people you can sell to, no matter the type of business. Today, I'll walk you through each one and provide a framework you can apply to any business you start, now or in the future. If you're not reaching as many clients or customers as you'd like, this might be exactly what you need, and it could make a difference in just minutes. For a quick intro, my name's Rory. I'm a member of JGP Consultancy, and here on Mind Your Buzz, I share everything I've learned in helping businesses scale. We want you to use this free content to grow your business, and when you're ready, reach out to JGP Consultancy if you want to go even further. Here's how I came across this powerful scaling framework. In working with a variety of clients across industries, from construction to IT to charity, I began noticing key strategies that set high-growth businesses apart. Each industry had its own nuances, but 2 main patterns stood out across the board. First, none of them had a magic bullet I didn't already have access to, but 2 things really separated them from newer businesses: consistency and market size. They'd all been in business for years, doing the same thing, and focused on steady improvement. This was a huge takeaway. Growth comes as a natural result of sticking with one thing and refining it over time. Second, each business targeted a much larger market segment than I did. In other words, they went after a big TAM, or total addressable market, filled with people who'd be ideal buyers. When starting out, it's normal to target a niche. Narrowing down is easier when you're beginning, and it's simpler to talk directly to a smaller group. But as you grow, expanding your audience becomes necessary. Let's dive into 5 ways to expand from a niche over time, creating a business that can grow as large as you want. If you're aiming for a substantial company, you may ultimately do all 5, but for now, focus on just one. 1. Go upmarket. Imagine your market as a triangle. The first way to expand is to move upmarket. This means going after a higher-tier customer within your core market. If you cater to smaller clients now, think of targeting enterprise-level clients in the future. For example, if you work with small businesses, moving upmarket might mean working with national chains or franchise brands. Moving upmarket brings longer-term, more lucrative deals. On the flip side, it's harder to close these bigger deals, and the sales process may take longer. But when you work with higher quality clients, you also increase the quality of your own company. 2. Go down market. The opposite approach is to go down market, or to start serving those at a smaller scale than your current clients. This can mean shifting focus to startups, freelancers, or aspiring entrepreneurs. The upside? This market has plenty of fresh clients entering every day. However, since they're just starting, they might lack consistent budgets or commitment. If your strength is marketing and sales rather than complex service delivery, down market might work well for you initially. It's a path that builds revenue but may come with a high turnover rate. However, it can give you the chance to practice and refine your offerings with new customers. 3. Move to an adjacent market. Adjacent markets are markets that solve similar needs to your current market, but in a different way. For example, if you serve salons, moving into adjacent markets might mean adding services for nail studios or spas. They're similar enough that your current strategies will still work, but you'll need to make small adjustments. The biggest advantage of an adjacent market is that you don't have to recreate your services. You just adapt what already works. Typically, you'll need someone knowledgeable in this new space who can help bridge the gaps. Expanding adjacent markets takes time, but it lets you maximize revenue potential without massive overhauls. 4. Go broader. Broadening your market means generalizing your product or service to appeal to a larger audience across multiple related fields. Instead of just targeting hair salons, for instance, you might expand to the entire beauty industry. Going broader allows for a bigger audience and faster growth, but it does mean you'll need to make your offer more flexible to serve this wider pool effectively. If you're seeking rapid growth, broadening can give you access to a much larger market, but it also invites a lot more competition from players who specialize deeply within each segment. Broadening too early can be challenging, so make sure your business has earned the right to scale at that level before making this move. 5. Go narrower. Finally, you can scale by getting narrower. This means finding a specific segment within your existing audience that brings the most value, and then targeting them directly. Think of narrowing as filtering out clients who don't align as well and going after those who are an exact match for your offer. Narrowing can be a powerful profitability booster because you're now focused on on clients who will benefit the most from what you offer. It's not about serving fewer people, but about serving the right people. For those who are new or making under $10 million annually, this is usually a highly effective approach. So, there you have it, the 5 ways to scale: upmarket, downmarket, adjacent markets, broader markets, and narrower focus. And, if all else fails, door number 6 is simply improving your service continuously. As you get better, you'll naturally grow. Drop a comment below on which of these methods seems like the best next step for you. And by the way, make sure you hit that subscribe button for more quick, actionable steps to implement into your business journey. Peace.